Good morning, people. So, in the last episode of investments, I have discussed about the need to invest, the classes of investments. Well, there are thousands of options in which you can invest your money, but majorly there are three to four types of majors in which you can invest, which are basically fixed income instruments. You can invest your money in equity, you can invest your money in real estate, you can invest your money in gold. So this is the episode 2 of investment. So in this video I will discuss about the fixed income instruments, and in the upcoming videos I will discuss about the other classes of investment that I have discussed in the episode first of investment. So this is the episode 2. Welcome to the episode 2 of investment. So in this video I will discuss about the fixed income instruments. Now what is fixed income instruments? Well, the word fixed income instrument clear its definition by itself. Any instrument, or you can say any income, which yields you or which provides you a fixed rate of return is fixed income instrument. Now there are several other classes of fixed income instrument. The classes that falls within the scope of fixed income instruments are bank deposits. You can invest your money in banks, and you can deposit your money in fixed deposits. You can deposit or invest your money in recurring deposits, FD and RD. You can invest in bonds. These all classes of investments falls within the scope of fixed income instruments. Now let's start from the scrap. Now what is the bank deposit? Well, every one of us knows about the bank deposits. You provide your money to bank, and bank take care of your capital, bank take care of your money, and in the end of the year, in the end of their financial year, they provide you a certain rate of interest on your deposited money that you have already invested in banks. Now what does that mean? If you don't know, even if you know, but I think there are some people who don't know about this fact. Bank provide you a certain rate of interest at the end of their financial year. For example, if you have deposited 100 rupees of yours in a bank as a savings account, now let's say bank provide you interest of 5% per annum. Now what does that mean? It simply means that at the end of financial year, you will receive in your bank account, in your savings account, you have 105 rupees. Initially you deposited 100 rupees, now you have 105 rupees in your bank account. Now what actually happens? Bank provide you interest. Why? Because you give your money to bank. So now many people think that depositing their money in bank is the safest measure to protect their capital. Well, this is not true. You don't even sure about your life, whether you live or not. Life is in risk too. Then how you can know about the markets? Risk is involved in each and every factor you do. Even life is in risk, as I said. But what does it mean that should we stop? No. Then the another factor that arises that what to do, because there are multiple banks who have committed fraud. Open up the history and you see multiple banks have committed frauds in the history, in the economy. So you can't say this notion that your money is safe in banks. You can't say this. All right. Another thing is fixed deposit. Now what is fixed deposits? Many of you know, but still, as this is the episode 2 and I have to discuss about the fixed income instruments classes, then the second class of fixed income instrument is fixed deposit. Now what is fixed deposit? Well, fixed deposit is nothing but a kind of deposit apart from your bank, which provides you returns generally more than the banks. It generally provide you returns more than the bank. And fixed deposits, when you invest in fixed deposits, you have to invest a lump sum amount of money at one time, or you can say once a year. It can be any time, but you have to invest one time. It can be yearly, it can be half yearly, or it whatever, as per the policy or as per your requirements. Another factor, or you can say third class, is recurring deposits, RD. You can deposit your money in RD too. Well, generally the rate that differs RD from FD is simply that the rate that you will receive at the end of your maturity period if you invest in recurring deposits, or you can say RD, is generally less than the fixed deposits. Now what is the major differences between fixed deposits and recurring deposits? This is the question that is arising in everyone's mind now. Well, let's differentiate between fixed deposits and RD recurring deposits on some basis. Now let's talk about first let's differentiate between fixed deposits and recurring deposits on the basis of returns. Fixed deposits generally provide you returns more than the recurring deposits. You will receive more returns because in fixed deposits it requires a lump sum, or you can say a large amount to invest. But in recurring deposits you have to make short intervals, or you can say who should go for recurring deposits. If you are a person who wants to learn to invest, or if you are a person who wants to develop a habit of savings, then you should definitely go for recurring deposits, because if you invest in recurring deposits you will see a substantial change in your life, that now a habit of saving is developing. Because in recurring deposits it requires a minimal amount of money at the end of every month. You have to deposit at the end of every month a certain amount of money to your recurring deposit, or to your policy man, to your broker. Now the return is generally higher in fixed deposits rather than in recurring deposits, and this is the factor through which we made a difference between recurring deposits and fixed deposits on the basis of returns. Now another factor that comes within the scope of difference is, you can say, there are multiple factors. There are multiple factors through which you can made a clear cut difference. Now the another factor that comes is duration. What is the minimum amount of money, and what is the minimum amount of time through which you can invest your money in FD and RD, and what is the maximum time up to which you have to invest your money? Well, the minimum time for which you can invest your money in FD is 7 days. You can invest your money, you can hold your money in fixed deposit for a minimum of 7 days. When it comes to RD, you have to invest your money for a minimum of 6 months. And the maximum amount, you can say the maximum time through which or you can say the maximum amount for which you have to invest your money, or you can invest your money, is 10 years for both. You can invest your money in fixed deposits for a maximum period of 10 years, and you can invest your money in recurring deposits for a maximum period of 10 years. So this is another factor through which we have made difference. Now the another factor that lies within is taxation. Whatever income you earn, tax will follow you. So now the concepts of income tax, the rates, the like how taxation system work, I will make a separate video on that. But as of now, let's discuss from the above. So when it comes to the taxation system, if you heard about the concept TDS, tax deductive at source, well, there are also tax collective at source, TCS too. I will make a separate video on this concept, because this concept is simply requires a conceptual clarity. And if I talk about the concept of TDS in this video, then the length of this video will become large, and I'm not gonna do this. So I will make a separate video on the concept of TDS and other concepts of income taxes. So in this video, for example, let's say if you are investing your money in recurring deposits, okay, you are investing your money in recurring deposits. Now TDS is not mandatory. TDS is not mandatory. Now what is TDS? I'll make a separate video that requires a conceptual clarity, because it's gonna not a true thing if I discuss TDS. As I said, TDS means tax deductive at source. Now does it sense? Not at all. So I'll make a separate video. Now for example, let's say if you invest your money in recurring deposit, now it is not mandatory to deduct TDS in case of recurring deposits, but when you are filing your income tax return, when you are filing your ITR, even if you have not deducted your TDS, but when you are filing your income tax return, you have to make a separate record about the interest which you have earned in recurring deposit. You have to make a separate column. You have to fill the separate column for that. There are spaces too. Now what does that mean? It means that it is not mandatory about you that you have to deduct TDS about the interest that you have received in your recurring deposit. But when you file your income tax return at the end of financial year, when you pay your tax in the assessment year, the only thing that you have to do is to collect all kind of information, and you have to mention your return in income tax return earned by recurring deposit. Now let's talk about fixed deposit. Now if you invested your money in fixed deposit, if you earn interest more than 10,000, TDS is applicable. TDS is applicable. Now this limit is extended to 40,000 rupees with effect from 1 April 2019. Now the limit is, if you earn a interest of more than 40,000 on your fixed deposits, you have to pay TDS. You have to collect, or you have to deduct TDS as per the case. Okay. Now if you submitted your PAN number, if you submitted your copy of PAN card, now the TDS rate that is now that you are liable to is 10%. You have to collect, or you have to deduct TDS at the rate of 10%. If the policy holder, which is basically we who have invested their money, they are liable to TDS at the rate of 10%. Now if one do not invested, sorry, now one if they do not submitted their PAN card, then the rate of TDS that they are liable to is 20%. Now they are liable to TDS at the rate of 20%. This is another factor. So these are the major differences between fixed deposit and recurring deposits, and my personal opinion about both kind of these investment is simple, that if you are a student, and if you do not receive that much of pocket money, if you don't have that much of money, then you should definitely go for recurring deposits. You should invest your money too in recurring deposits. And if you are a person who are earning your money, and even if you want to go for the safest measure, then you should invest your money in fixed deposit. It's gonna help you. Okay, now let's talk about the bonds. What is bonds? Well, in simple terms, you can say that, for example, now let's conceptualize the concept of bond from the point of view of issuer. Now who is issuer? The one who issues bond in general public. It can be anyone, it can be government, it can be government agency, it can be public agency, anyone. Now what is bond? A bond is nothing but a loan from investor. Whenever company wants to take money, whenever company needs funds to invest, whenever company needs funds to make their projects work in their organization, they need money, and for that companies and organization issues bonds. Now the investors who applies for that bonds apply in different denominations. They are applying 250, 500, 750, 1000. It can be anyone. Okay, now one thing that matters here is that the company in return provide interest to investor. One who applies for the bond of organization, one who applies for the bond of company, the company in return provide for interest to the investor. Okay, so does investing in bonds is safest measure? I am not saying that. Risk is involved there too, but up to a certain sort you can say that if you invest your money in bonds rather than if investing in stocks, then the risk appetite, or you can say the level of risk, is not that much, that the kind of risk is in markets. Okay, so you should definitely go for bonds too. Now it is conclusion to this video is simple. You can invest, you can deposit your money in bank savings account, you can invest your money in fixed deposits, you can invest in recurring deposits, you can purchase bonds can be issued by anyone, bonds can be issued by the governments, bonds can be issued by government agencies like NTPC, National Thermal Power Corporation, NHAI, National Highway Authority of India. Okay, it can be issued by anyone, and it can be issued by private agencies too. SBI, Axis Bank, they also have their bonds. You can purchase directly from them. Okay, now these are the basic things about fixed income instruments. In the next video I will discuss about the equity stock market. Okay, so the conclusion to this video is simple, that learnings are the important. and this channel is all about finances, stock markets, business learnings, entrepreneurship, spirituality. So I am discussing these things with you. One thing that I wanna clear to each and everybody is that in any of my video I am not saying to anyone that you people should give your money to me and I will invest your money. I am not saying this in any of my video. I have received a personal opinion in which I heard that I am asking to people to give their money to me. You can see any of my video. I have not discussed this thing. I am not a fraudster. Okay, change your perception. Anyone who said this to me. Okay, so in the next video I will discuss about the equity, and after that we will talk about the real estate. After that we will talk about the gold. So these are my views, these are my personal opinions. You should definitely invest, and if you want to invest, then you should invest. If you don't want to invest, then you should not invest. This is not a mandatory thing that you need to invest your money. Okay, all right, so we'll meet in my next video. Thank you.